Hello, dear algorithms traders. In today's post I would like to show you why creativity can be an advantage in trading. In the last 8 years I have personally gained a lot of experience, especially in the area of creativity, and discovered and developed many things that did not exist before. In this video, we'll take a look at the extent to which these things can support us in retail. The first official stock exchange was founded in 1409 in the city of Bruges, Belgium. This means that the stock exchange is already over 600 years old. And of course, the changes in the stock market over the centuries also changed the different strategies. The first candles were created around 300 years ago and are thanks to a legendary rice trader from Sakata who was known as Homa. Through his creativity, the emperor elevated him to the nobility as a samurai, making him the richest man in Japan. However, it would be another 200 years before Homa's trading strategies became known in the West. In the 1980s, the young American trader Steve Nissen became aware of the candles and made them available to the financial community in his book 1989. At that time, the candles were the ultimate in the markets. A short time later, the further development followed with the Heikin Ashi and the Renko charts, which, by the way, all came from Japan. In the second generation of stock markets, candlestick patterns were formed, charting techniques became popular, and indicators flooded the markets. At the beginning of the 2000s, high-frequency traders conquered the markets, which meant that candlestick patterns and indicators no longer worked so well. Then suddenly volume trading and footprint charts took over the markets. Trading coaches quickly recognized the huge opportunity and gradually jumped on the volume bandwagon. Many 100,000 traders completed a volume trading course, but it didn't bring them any closer to their goal. Meanwhile, the big players have adopted the practices of high-frequency traders and used them to their advantage. The fourth generation of stock market strategies has already begun and is called algorithm trading and big player identification. This begs the question, is new always better? A clear answer to that is no, because there are 1,000 examples that prove that new doesn't always have to be better. But there are also 1,000 examples of companies that had the attitude, we have always done it that way. Unfortunately, they are bankrupt today and have had to lay off many employees. Who among us would still take a carriage to work today? But at the same time, of course, the question also arises as to whether it necessarily has to be an electric vehicle. After working 10 hours, who wants to light the fireplace to heat their entire house? Here, too, the question arises as to whether it has to be a heat pump. Who is still willing to do without electricity in their household these days? Are personal ads in the newspapers still the best way to get to know someone? Or does the internet already have some advantages? Of course, the latest is not always the best, but unfortunately different rules apply on the stock market. The person with the best and fastest technology also earns the most money. The best example are the high-frequency traders. I can still remember well that in 1990 I was only able to buy my first shares through my bank, which, unfortunately, weren't executed until the next day. You could get information from the current daily press or from the respective bank, and they often recommended stocks that they wanted to get rid of. With the beginning of the computer age, there were soon the first programs that could be used to analyze stocks. Yes, that was all still a bit Stone Age. Little by little, the programs became better and more efficient, and when you look at how you can analyze and evaluate stocks today, it's quite a sensation. Added to this is the fact that you don't even need a bank to buy shares and you can decide for yourself when you get in and out. In the last 600 years since stock exchanges have existed, there have been billions of transactions and attempts to find the Holy Grail, so far without success. And these billions of transactions took place in exactly these three areas. So, I said to myself, if no one has managed to crack the trading code, it would be stupid to continue searching in this area. That's exactly why I'm working on the topic of algorithms and big player identification. By the way, not to find the Holy Grail, because from my point of view it doesn't exist. I'm taking this new path to maintain my winning rates in the long term. Because of the algorithms used, the market is becoming more and more complicated, making it increasingly difficult to achieve long-term profits. While the big players are interconnected internally, it is clear that little information about their practices is leaked to the outside world. While the retailers are not networked with each other and are therefore looking for open exchange. On the one hand, this makes it easier for the big players to identify new approaches from retailers. Basically, it is difficult to develop new ideas on the stock market. However, you first have to say goodbye to the old ideas. Our brain is like a glass filled with stones. If I want to implement new ideas, I first have to remove some old stones in order to add new stones and ideas. When I started looking for algorithms on the market in 2017, I was laughed because that will never work. But just because someone says it doesn't work, that's no reason not to try it anyway. Especially since we as traders have enough time for this because we wait like a hunter in a perch for the right opportunity. We spend 70 to 85% waiting, which is easily a few thousand hours a year, and we can use them sensibly. Since I learned to play the guitar in my youth, my first thought when I came into contact with trading was that there must be a way to read the candlestick charts like a musician reads his sheet music. Of course, I wasted a lot of time in the beginning trying out hundreds of indicators to make a decision for me. However, I already knew that high volatility also entails high risk, and that's why I looked for a market where I wouldn't suffer losses so quickly. I analyzed the markets and found that 70% of prices are within an equilibrium. Since I didn't want to only trade 30% of the time, I had to find a way to also trade in equilibrium. It was very challenging, especially at the beginning. Sometimes I was in the market for 2 hours before I was finally stopped out. It all happened much too slowly for me. The binary options were much better because you knew within 1 minute whether you had won or lost. However, the efficiency was the binary options scam. Scalping was the correct approach for me, but unfortunately it also involved very high costs. That's why over the years I developed the pip value per minute, which allowed me to reduce these risks. We traders have 3 enemies: fear, revenge and greed, and once we defeat these enemies we can reach our break-even point. With the help of the law of large numbers, I managed to reach my break-even point within a year and a half and lose a maximum of 1,300 euros. Experiences build up over many repetitions. Countless calculations helped me figure out the euro-US dollar as the best asset for me, as I was at break-even within an average of 25 seconds. I also calculated when I could best trade there. I analyzed the advantages and disadvantages of the big players and calculated my only 3 chances. And I wanted to take advantage of exactly these opportunities. I found that the downward movements were approximately 30 to 40% faster than the upward movements and was therefore able to improve my profits by 25%. I worked with resistance and support from the start and was able to improve my RRR with the help of the tick chart. The currency strength was also an important aspect that gave me a lot of information. For a year and a half I had more losses than profits, and then I broke even. It took a few years to gradually get into the profit zone. Although I had more wins than losses, I wasn't really making any progress. So, I started to develop clear strategies and get more involved with the big players. After all, they were the only ones moving the markets. We know that the world is changing so quickly that we have to run to avoid being left behind. Standing still means going backwards on the stock market. In 2017, I opened a blog at Forex Factory, which initially served as a trading diary to help me record my thoughts. A year later, I published the Bionic Candle I had developed there because I had problems understanding the candlestick. The Bionic Candle not only showed me the strength of each move but was also able to identify the invisible price zones of the big players. This made it easier to find the exact turning points. Many members of Forex Factory were amazed by my creativity and followed my blog. After 6 years now, I am in second place out of 800,000 members in Germany and in 28th place worldwide. Writing gave me a lot of ideas that helped me personally. Starting at Forex Factory was my personal breakthrough. And now things suddenly changed very quickly. In 2018-19, I started working with future data. I noticed that the future and Forex data behaved almost parallel to each other. So, I tried to combine both markets. I analyzed the advantages and disadvantages of both markets, developed a clear approach and strategy, and then analyzed data from the futures market in order to make a trading decision for the Forex market. I got my internet up to speed, gradually optimized my hardware, and at the same time made sure I had enough screen space, as this saved me a lot of time. By the way, I always get great cover letters from one or two traders who implement some of my ideas and also start to get creative. This motivates me a lot because it shows that traders want to go their own way. Of course, I knew that I would never have better technique than the big players. But that is not the crucial point. It is much more important to be faster than 80% of retailers. I gradually began to identify algorithms and used all the options available. I discovered that of our five senses, the eyes have the slowest perception, and the ears have a clear advantage. I developed the fifth element in trading and used sounds to emphasize certain movements. Looking at my chart today, you might think that I have already reached my goal, but I'm far from it. It's just getting started now. Let's look at an example of how creativity can help us. When we look at this M1 chart, what do we notice here? First of all, we see that the price was repelled downwards twice here. We draw a line and a second line, and now we have a kind of resistance zone here that the price has reacted to twice. Now we have to see which candle breaks this zone. Although this candle breaks through the zone, unfortunately it is taken out by this candle. So, at the end you're left with this yellow candle. We draw the candle and now look for the strongest, opposite candle in the past that has moved downwards. In this case, the Bionic Candle is a blue candle, and we draw that too. This creates a black field, basically my iron core. This is a zone that is difficult for price to break through. We now scroll into the future and see that the price was rejected upwards once here, again here, and also here. There is also a key candle above that we draw. The upper zone is the crucial point. And which candle breaks this upper zone? Exactly this candle. And if we plot them, we see that the price reacts accordingly there. Here we see three blue candles trending downwards. This means that the price there is strongly rejected downwards. We draw a zone and see that the price is held there in equilibrium. Here too we see that the price is being pushed strongly upwards. We draw the zone and the price will react thereto later. To reduce our zone, we go to a 4-tick chart and draw the yellow 1-minute candle. Here we find the strongest movement, but we also have to consider the gap, which started a little below. We remember the price zones and record them in our M1 chat. We have now reduced the zone from 3 pips to 2.3 pips and finally to 0.7 pips. We can also make the upper key candle smaller by going to the tick chart and drawing the strongest zone. This allowed us to reduce the size of the zones 3 to 4 times, which has a significant impact on the RRR. We know that after the price went into the lower zone, it was rejected more strongly to the upside. Interestingly, as the price moved lower, there were more market sell orders than market buy orders. Normally, when the price goes up, more market buy orders than market sell orders should come into the market. But that wasn't the case, because in this ramping movement more market sell orders than market buy orders came into the market. And that's what we're looking at now. First of all, we see that the market sell orders have a clear advantage. And the price is already starting to go up again, and pay attention to the market sell orders, they still have a clear advantage over the market orders. Only on the fourth bullish candle do market orders suddenly predominate. The price initially runs downwards, and the brakes are applied on the ask side. Suddenly we see a strong break on the bid side. The market sell orders are now massively intercepted by limit buy orders. This means it is possible that only a few market orders drive the price up. Furthermore, the market sell orders are intercepted on the bid side. The price continues to rise. Now some market orders are absorbed. Then the market is pushed further upwards. If we now compare this with the previous display, we see that significantly fewer market sell orders come into the market than market buy orders. This means there is a high probability that this is a reversal point and the price could now move up more strongly. If you want to make real progress in trading, you have to master the topic of money management. Not only can you calculate income, but you can also find errors that will help you move forward in trading. There are no patterns in the chart or volume, but there are patterns in the algorithms. If you know the procedure, the big players can follow you more easily and know exactly what they are doing. Many traders already follow me at Forex Factory and achieve sensational results. For this reason, I would like to motivate you to become creative yourself and take paths that no one has ever taken before. This makes it harder for the big players to recognize your strategy and means they can no longer take you out of the market as easily. I'll keep my fingers crossed for you and look forward to seeing each other again soon. Kind regards, Michael.